Hello, and welcome to the BioSyent Inc. Q4 and full year results presentation. My name is Rene Gorham, and I'm the Chairman and CEO of BioSyent. I'm going to start today's presentation with a review of our sales performance. So this chart shows you our quarter and year-ended sales results over the last 5 years. I'll focus on the 2015 results. So in the fourth quarter, our sales reached $3.84 million, which was a 26% increase versus the previous year period. And for the full year, we reached just under $15.4 million, representing a 26% increase as well versus previous year. Taken over a 2-year time span, so 2013 to 15, our sales nearly doubled, up 97%. And if you look back as 2012 as the base year, we tripled our business over that period of time. So the growth drivers for the business were in the fourth quarter were our pharma business, clearly. Overall, pharma was up 26% Q4 of 15 versus the Q4 of 14. In Canada, we had another record quarter for pharmaceutical sales, and that was really made up of, well, overall in Canada, our performance versus year ago was up 20%. Sequentially, that is Q4 of 15 versus Q3 was up 9%. Individually, on a brand basis of significance, FeraMAX Powder was up 18% sequentially, Q4 versus Q3. Cathogel up 18% Q4 versus Q3, and Repagyne up 40% Q4 versus Q3. All of these comparable sequential numbers. So of note here is Repagyne. We've been talking about the progression of this business now over a few quarterly reports. This business has been growing steadily, really starting the end of Q1 in 2015. That growth has continued at pace, and 40% quarter over quarter growth is strong, albeit it's off of a lower base, a still evolving base, but we're pleased with those results. During the quarter, we successfully transferred the marketing authorization for Cysview to BioSyent Pharma from Photocure, our partner, our licensor for that product. It's really a precursor to moving the business over. That allowed us in November of 2015 to initiate the promotional launch of Cysview in Canada. In December, we made our first shipment of vegan certified FeraMAX 150. If you're interested in more information on vegan certified, feel free to go to our website, feramax.com. This is a new initiative and a change in product that we've done a soft launch for, and be doing a full kind of more promotional launch as the year progresses, likely towards the beginning or middle of the second quarter. It essentially assists the healthcare professionals in selecting which patients are appropriate for FeraMAX and expands the patient population available to FeraMAX. Subsequent to the fourth quarter, some things of note. We received our first shipment of Cysview. It's in our warehouse. It still needs to undergo one more step in terms of QC to be released from our warehouse. All of the Cysview production sites that are involved in producing the Cysview product have now been added to the BioSyent Drug Establishment License. This is one of those important steps from a regulatory perspective that will allow us to ship to our customers. And we also held advisory board meetings that included docs from 4 large cities in Ontario and Quebec. Those 2 provinces would make up about close to 2/3 about the Canadian population. I think 20 doctors participated in these advisory board meetings, and I can tell you that the feedback we're receiving on Cysview is very positive. March is obviously still fairly young, being March 4th today. We can confirm that Agilent System Atropine new production has been completed, and I think by today we have that production in transit, and we are prepared to restart shipping of that product at the end of March. Finally, FeraMAX International business has received orders from 4 markets. That included 2 new markets that have either been initiated or will be initiated with shipments in the first quarter of 2016. We've got more visibility because of the lead time it takes to get orders and get everything ready to go. And we can see already that business is in good shape and tracking to our expectations, or in fact, I should say, to exceed our expectations in the first quarter. This slide shows you our pharmaceutical sales by quarter. This version of the slide takes it up back all the way to Q3 of 2009, and you can see how we've steadily increased that business over time. There are a couple things I would just like to point out here on this slide. So one is Q3 15. Quarterly sales were over 4 million, and Q4 of 15 down to about just under $3.8 million. So for those that have been kind of watching our business and listening to these presentations, you'll know our business to international customers is lumpier. So it isn't the steady kind of distribution to 40 distribution centers across Canada, pharmacies, the kind of normal slope of growth. In some cases, these customers are buying 2, 3, 4, sometimes even 5 months supply at a time. We should expect to see a lumpier trajectory on how those sales come in. Certainly, we had a very large order that shipped in Q3 of 15, and we did not expect to see a similar revenue on the international business in the fourth quarter. So overall, the quarter was up 26% versus year ago for pharma, not in the international business, though the Canadian business had a 9% sequential growth. So before I get into EBITDA and net income after tax, I want to kind of walk you through an event which we described in our MD&A for the second quarter, and has now come to impact our P&L in the fourth. So in June of 15, the company voluntarily recalled certain lots of the Agaton system atropine sulfate pre-filled syringe because of a labeling issue. So we withdrew those lots and had no inventory to sell. So we've fixed the matter. We have got new supply, which I've mentioned a couple of minutes ago, and we expect to restart shipping on this product by the end of this quarter. However, we did have what I would describe as one-time non-operating expenses totaling $292,000. These were expensed in Q4, and they certainly impact 2015 EBITDA, NIAT, that is net income after tax, and earnings per share, both for the year and for the quarter. So in the chart below, you see the impact on EPS was 2 cents, and a fairly material impact on the quarter. You'll see that in subsequent slides. For the year, we would have been 26% EBITDA growth versus 19% actual, and net income after tax very similar, 26% and 19%. Significant impact, not material to our business, but important enough that we thought we should highlight this to shareholders and investors. And I'll walk you through on a couple of subsequent slides how that looks. Just so you know what the makeup of that $292,000 was. Reversing of revenue that was recognized in shipments up until the recall. Though that was the smaller impact, we did also have to expense inventory that we had that was produced and with us. So overall, a $292,000 pre-tax impact. So how does that tumble through into EBITDA when you do year-ago comparison? For the year, we finished at $5.11 million in EBITDA, up 19% versus year ago. For the quarter, we were just over $1 million in EBITDA, $1.08 million, and that was down from $1,056,000 in the year ago quarter. You can see on a year ago comparison basis, without the impact of the recall being expensed, that would have led to a 23% growth in Q4 versus year ago. Net income after tax, similar impact. So our NIAT for the year reached $3.76 million, up 19% versus year ago of $3.15 million. And the quarter numbers, net income after tax was actually up versus year ago, would have been up 30% without the impact of the Agaton atropine recall. I thought I'd take a few moments to just talk to you about foreign exchange volatility, impact on our business. So for those of you that have been following us for some time will know that BioSign is essentially an importer, certainly a net importer. We look for unique and differentiated products that are typically manufactured in the United States or Europe. And since mid 2014, the Canadian dollar has been on a steady decline. On this slide, you see a chart showing you the 12 months ending December 31st. This Canadian dollar decline of about was 19% in the calendar year. In January, it fell even more before a rebound, which many say might be temporary. So I just want to talk a little bit about what we do to manage this and what kind of impact it will have on our business as we move forward. One thing to note, though, when you look at our financial statements and go through the MD&A, you'll see that our gross margin was consistently maintained in the 78.5% range. And so despite a decline of 19% of the CAD versus the USD and similar deterioration versus the euro, we were able to maintain margin. So what do? We manage risk through a number of means. We've got forward contracts to purchase US dollars. We generate revenue in USD and euro. This is sales of Ferromax and Ferromax powder to international customers, which represents in aggregate probably about 60% of our 2016 requirement for foreign currency. On the spot market, we do use our strong balance sheet and cash position to make timely forward purchases of inventory when we see rates in a favorable position versus kind of the long-term trend. So at the end of December 2015, the company had forward contracts that essentially covered the full 2016, allowed us to purchase 150,000 US a month, 150,000 a month US, for a total aggregate of 1.8 million, but it required the spot exchange rate to remain below 133. So it's, as of today, it's not there. It certainly wasn't anywhere close to that through the month of January and through February. We're pretty close to that number now. So that's a magic number for us. On one hand, we do also have some additional forward contracts that allow us to purchase when the rate remains below $1.40. It allows us to purchase at a rate that's much more favorable to what you see even at today's rate. To the mix of our hedging activities to kind of manage foreign currency risk and revenue, we expect that the depreciation of the Canadian dollar to affect our 2016 results in the range of about 1%. Through the course of the year, excepting of course a black swan event where the Canadian dollar might go dramatically much lower into the 140s, where there might be some additional impact beyond what you see here of 0.5 to 1%. But to keep in mind, we run our business on a fairly high gross margin. These currency swings really are affecting a pretty small cost of goods relative to the top line. We not only do we have the benefit of foreign currency sales, but we also benefit with the swings in those currencies. We're looking at about a 1% impact to our EBITDA margin for this year. I also want to talk a little bit about how the company's been investing in its organization and its people and talent. And really I describe that as our bandwidth, so our capacity and also capability. So we've brought in over the last certainly in 2015, but really over the last couple of years, there's been a dramatic growth in not just in our sales and profit, but our organization, the people in it, the management team. We now have a leadership team of 7 very experienced, capable individuals. They support a workforce that grew last year by 33%. 60% of that addition in people is in the selling and marketing area. So that's really our key to our business. We're a commercialization platform, and selling and marketing really drives that. But in addition to the commercial headcount, we added new positions in commercial analysis and finance, business development, and human resources. We expect a lower headcount growth rate in 2016. We're going to continue to invest in our commercial teams. We expect overall the overall company headcount to grow by about 10% in 2016. We've also been investing in our product portfolio. So we've talked about SysView I think that's going to be a key engine for growth for us, not just this year, but for the next several years. So we licensed that product last August. We moved the marketing authorization over. We started talking to healthcare professionals about it in November. Overall, last year, we invested $942,000 in acquiring and preparing that product for market. We've continued, as I've described, some of the steps to jump over the hurdles that we need to get the product ready and so that we can start getting the first sites using and shipping product. So we now have product available to us. Really the key next step was to make sure that the blue light cystoscopes were available in Canada, because Cysview requires a blue light enabled cystoscope to deliver on its brand promise. And so we expect, based on the information we have as of this date, that demonstration equipment is available shortly and will be available for acquisition by our customers, by hospitals, in Q2 of 2016. So through this whole process, we expect, if you have not yet inferred, we have not shipped Cysview yet. Certainly no Cysview sales are included in our 2015 results. We have no Cysview sales that we expect to record in the first quarter of 2016. We expect to start shipping and generating revenue on Cysview in the second quarter of this year. So where is growth going to come from? Not just for 2016, but beyond 2016. So we've got significant growth opportunity within our existing portfolio, primarily coming from FeraMAX, FeraMAX 150 and FeraMAX powder. Repagyne, as you have seen on earlier slides, has got a good growth rate. Cathogel, and existing customers for FeraMAX International. In addition to that growth, we see Cysview, the Aguettant System Atropine, a new Aguettant System product on which we're awaiting Health Canada approval, and then new markets for FeraMAX International sales to come on stream during the course of 2016. That as a base would allow us to kind of look at growth rates that are similar to what we've seen certainly in 2015. And then in addition to that, we've got a very robust pipeline of new product opportunities that we're looking at. I describe it as we've never had more in there, but I don't want to say too much about it because I'd really prefer to talk about products and deals that we've done versus things that we're working on. So I'll leave it at that, and you'll just have to kind of keep an eye on the news flow from us to see what's coming in terms of new. Anything new that we do is likely not to have an impact on this year's revenue results, but certainly we should be able to do things that will have impacts in 17 and certainly drive the growth curve up over 17, 18, and beyond. I've talked in the past about our operating expenses. So the Aguettant System Atropine recall expenses of $292,000 are taken into G&A, and you'll see them on this chart in the fourth quarter, and obviously impact the full year numbers. So you could adjust those numbers by that amount and see that we've maintained on the regular operating expense side of our business, we've maintained our ratios, and that's really how we manage the business to deliver an EBITDA margin of about 32%, a little over 32% for 2015. In 2015 overall, if I haven't already delivered the message, we've been investing in people and those people involving promotion of our existing products and of our new products and getting ready to continue to grow the business as we move forward. Quick look at our balance sheet. Our working capital grew 39% during the course of 2015 versus December 31st of 2014. Our cash position grew to $9.7 million. That was an addition of about 1.7. Keep in mind, out of that, we had cash outflow in the acquisition and commercialization preparation for Cysview. You see the intangible asset line growing there to $1,079,000. I know that that cash position has grown in both January and February, and we expect to be adding significantly to that cash line as this year progresses, not including investments in licensing of new products and taking them through regulatory process. Something that I like to underscore when I make these presentations, the company has no long-term or short-term debt. We do have an operating line of credit with the Royal Bank of Canada. We have not used that line. We have funded our growth in 2015 and in 2014 and in years before. We've funded that all from our own internal operations and profit generation. We haven't used any leverage. We haven't used any debt. The last time we did an equity financing, I believe, was in 2002. So we're pretty proud of that we've kept a pretty clean balance sheet intact as we've grown our business and really added the revenue streams and the potential for growing a very substantial business. Generally, I'd finish off this presentation with a quick look at our return on equity. So in 2015, for the full year, it ended up at 37%. Of course, that would have been slightly higher without the non-recurring, non-operating recall expenses. One comment generally on this slide is it'll be hard to duplicate the go-go years of 2012, 2013. But we make no bones about the fact that a 37% ROE is outstanding, and based on kind of how we see our business progressing, we're fairly confident that we're going to be able to deliver on a consistent, ongoing basis, well above average return on equity performance. Just want to finish off the presentation with a quick look at earnings per share. So for the full year, we ended at 26 cents. Shoulda, coulda, woulda, that would have been 28 without the atropine situation. But overall, good performance versus 22 cents in the year ago period. And we see that EPS progressing as this year unfolds. Feeling very confident and good about the fact that just over the last 2 years we've doubled our EPS. We should look forward to a performance that would come into that range. So just to finish off, just to remind you, we're traded on the TSX Venture. We also have a US OTC Pink listing, BIOYF, if you're a US-based investor. We have 14.6 million shares outstanding, fully diluted. So a little over 14 million that are issued now, and just under 600,000 options. I wanted to thank you for your interest in our company and let you know that if you wanted more information, you can track us down on corporate website and product websites. Thank you.